how bad is it? How would you compare the economic situation, now political as well, part of that, to previous crises?
What's important for Hong Kong right now isn't so much GDP growth or lack thereof. Things go up, things go down. What's important right now for Hong Kong as a financial center is the big question of whether the one country, two systems hold. And that is not a yes or no, black and white thing. It's a whole spectrum. It's the firewall between Hong Kong's norms and practices and those of the mainland. Is there a robust firewall? If there is, then regardless of how the economy performs, Hong Kong will be fine as the default choice almost as financial center in the Asian time zone. If not, then Hong Kong will have to compete basically on who's paying the piper. You know, if you're doing business with mainland China, then you will look at Hong Kong. But not just Hong Kong alone. Hong Kong will then be competing with perhaps Shanghai, as the London Stock Exchange decided. You know, we prefer to go to China through Shanghai. And if China business is not that important to your bottom line, well, you might look at Singapore, you might look elsewhere. Why choose a place that has the shadow of civil unrest and a use-by date, 2047? So that is actually the problem facing Hong Kong right now, not its GDP growth.
But certainly that's one of the problems. But of course, we have what's going on here, fiscal measures coming in to try and prop up the economy, to try and perhaps also get rid of some of the angst which has developed over many years. And people have described the packages involved here as being peanuts. We're looking at something like 1% of Hong Kong's economy, according to a guest we have quite often, Alicia Garcia-Herrero, for one.
I do not think that the economy itself or any stimulus given by the government or any help with livelihood is significant in the long term. In Hong Kong's status as a financial center for the Asian time zone, that is just a day-to-day thing. You know, people are happy today with their livelihood, not happy tomorrow. But the bigger picture, how important Hong Kong is, that is not an economic question.
Well, exactly, and this is, I think, that some of your research here, because many people off-site, when 97 and handover took place, Hong Kong represented 14% of the whole of China's GDP. Now it's just about 3% or even less than that. But that's not what you look at. You saying that its importance to China cannot be overstated.
Yes, the contribution of Hong Kong to China's economy, that is really not that important.
Well, give us your rationale here.
Well, Hong Kong allows China to have its cake and eat it. It allows China to have one country, two sovereign ratings, one for China itself, one for Hong Kong. It allows China to have one country, two currencies. The trusted Hong Kong dollar convertible into US dollars any day, and the tightly controlled renminbi.
Right.
It allows Hong Kong to have one country, two legal systems. Socialist law with Chinese characteristics in China, and common law in Hong Kong, the basis for contracts and a lot of transactions worldwide. So basically, Hong Kong is important because it allows China to have all these extra advantages. And don't forget, Hong Kong is a separate customs territory from China. So in these days of protectionism, that's a big deal.
Do you think it works also the other way? That because of how the system is set up, that Hong Kong also enjoys some of the privileges that comes being attached to China. Case in point, China has $3 trillion in reserves. Will China defend the financial stability of Hong Kong if and when that need arises?
Oh, I'm sure if and when that need arises, China will definitely prop up Hong Kong. But I don't think financially the Hong Kong dollar is really very strong. There is so much confidence in it, not just from overseas, but Hong Kong people themselves. In spite of all the protests, no one even thinks about the Hong Kong dollar being in trouble. So what Hong Kong benefits from is China's huge market. If you want the China market, what better place than to come to Hong Kong? But as I said earlier, if this robust firewall between Hong Kong norms and practices and that in China is seen to be crumbling, then Hong Kong is not the only choice. Shanghai, as I pointed out. So a lot really depends on this perception of the firewall between Hong Kong and China staying robust.
Do you see any evidence of money coming out and going to Singapore? Other people have been citing that. We had a 17% increase in foreign reserves in Singapore the other day. That came from the monetary authority there. And people are saying that is money coming out of Hong Kong. It could do real damage to the territory and make matters worse if we suddenly find a dearth of cash here, basically.
Well, money presumably has been going to Singapore, but to what extent that is a seasonal one-off thing, August, or whether it is a long-term trend. Now, most reports that actually put a number on the amount going to Singapore do not make the link between the protests and the money leaving. But if you're an average investor, you will naturally think of the correlation. And of course, Singapore has helped in that sense because, according to newspaper reports, Singapore bankers have been told not to capitalize on Hong Kong's troubles. So in other words, there must be something to capitalize on, or else, you know, the Singapore government wouldn't say that. But in the near term, no matter what happens politically, no big institution is going to dump Hong Kong. The consequences are too dire. Hong Kong accounts for some 70% of all mainland Chinese IPOs overseas, 60 to 65% of its overseas bonds,
right,
of FDI, and of China money going out. So it's really huge. And even if you are thinking of leaving Hong Kong at some stage, you have to have a war plan on the scale of the invasion of Normandy. I mean, it really, really is a big deal. So near term, I don't see anybody leaving.